Yeah. Yeah, I got to tell you a funny story about that driving thing. So my son called me this morning. He had just got his car fixed yesterday. The starter was gone on it. It died going down the highway, and it seems like it might have been the alternator. And you know how one thing goes, another thing does. So I go, I pick him up. He was about 25 minutes south of me. Then I brought him down just north of Boston into a town called Medford. They're working at Tufts University. He's a union carpenter. He's a journeyman. He's 19, which is unheard of, and he's making ridiculous money with ridiculous union benefits and everything. And he said, "Oh, this drive sucks every single day." I said, "Do you understand you're making more money than most adults that I know? And you've got to drive 40 minutes to work. You realize people drive into Boston and sit in that
Right.
traffic and everything else every single day for less money?" Webinar is now streaming on Facebook. To me, that almost seems like we are live, and we are live. Jake, it's WE''RE. We're liver. Just playing with you. Hey, everybody. Welcome back. It's Johnny Moe, and I'm here with one of my favorite guests to talk because he does all the talking. All I have to do is smile and nod. David Childers from Keeping Current Matters. How are you, David?
Johnny, doing good. It's good to be back on this Friday afternoon and talk a little bit about all the things happening out in the world of real estate, world of just the world we live in. So excited about that.
Yeah, there's a lot of stuff happening out there, and it seems like we're moving fast and furious. It's almost like an elephant on a unicycle riding down a black ice hill, and they're out of control, right? When is this thing going to tumble? But the elephant's still staying on that thing, holding it up.
Yeah. I think there are a lot of people, a lot of questions about that. We've seen several things come out, and we'll talk about it today. Unemployment rate came out. There's confusion around that. Experts really missed it. We saw inflation this week come out. And folks going, okay, things are getting expensive. We know things are getting more expensive in our business, not only home prices going up, but lumber going up. So where's this all heading? I think a lot of questions around that.
Futures took a tank yesterday, the day before. And I tell you what, as long as DoorDash doesn't put a surcharge on the delivery fee, I'm going to weather the storm, I think.
That's good perspective.
Yeah. So talk to me about the unemployment, because I've been disconnected from the news for the past couple of weeks. I haven't looked at any of that. What's going on?
Yeah. So I think there's, Johnny, it's like we always talk about. There's a lot of headlines out there. There are a lot of things trying to grab people's attention. And the question, in our business, I think the question in our responsibility is, how does that impact real estate? And how do we control what we control? We can't, obviously solve issues out in the world and all of that. But let's talk about that, because experts got it wrong this time. And I'll share a little perspective with you, starting off here with the unemployment rate. Bill McBride said the day before, some analysts think this will be a very strong report with maybe 1.5 million to 2.1 million jobs added. Wall Street Journal said that morning, non-farm payrolls are expected to increase by 1 million in April. The unemployment rate is expected to fall to 5.8%. And what happened? 266,000 jobs added. Unemployment rate goes from 6 to 6.1%. It's the first time since, we saw, almost 15% unemployment last year that we saw a little tick up. Now, I think people are concerned. You talk to Republicans and they're going to say, well, we're giving people too much money and they don't want to go back to work. You talk to maybe Democrat, they're saying, hey, people can't go back to work safely and find childcare. You talk to the sociologists and they don't know what happened. So there's a lot of confusion in that. And ultimately, I think in that confusion, maybe clients having questions, but the real question is, how does this affect us right now in the real estate business? And, we look at the unemployment rate, 6.1% unemployment right now. We sold 6.5 million homes last year when we saw a peak of almost 15% unemployment. So likely not to hit, our business or affect our business in a big way. And I think the reality is we want to see people get their jobs back. We want to see the economy recover, but real estate has thrived through the pandemic for a lot of different reasons. We'll talk about that. But the reality is that's more of a headline right now to scare and maybe get people thinking, okay, is the economy recovering? If there was a silver lining of that unemployment report, it may slow the Fed down a little bit on, some of their action, which I think will be beneficial to us long term. in the rate scenario. So good rates, right now. But again, what experts are saying is they're going to go up. The question is just, how quickly and by when rates are going to move. And so a lot of confusion, the unemployment report. The other one was just lost it in my mind. The inflation report came out 2 days ago. Biggest jump in inflation that we've seen in a long time. We know in our business, things are getting more expensive. The average price for lumber on an average priced home has gone up $36,000 over the last year, according to the National Association of Home Builders. But it's interesting to look deeper into this inflation report. No doubt, through the recovery from the downturn last year, we're seeing inflation, seeing things run hot. But one of the big reasons, and it just isn't being talked about widely, for the acceleration was what they call the base effect. So if you look at this time a year ago, CNBC says it best, the economy was hit with the worst of the COVID pandemic, and inflation was unusually low. So it's like in our business, when we start to look year over year, and things this time last year were unusually low in housing activity. And then when you look at a year over year comparison, they look much higher than they are. But no doubt inflation is happening across the country. Again, what does that mean to our business overall in the economy? Paul Krugman said this: the inflation report wasn't a nothing burger, but it's sort of a White Castle slider, not a very big deal in the overall perspective. There are things that are heating up in price. And if you want to go look at that, go back and look at the CPI report that's put out, used cars going up, other elements of the economy going up, and things costing more. But when you look out there at economists, they're not raising red flags over that and saying, this is a big deal. NAR came out as well, if you want to talk about pricing, with their first quarter price report. And interestingly, 99% of metros recorded year-over-year price increases. 89% of those had double-digit price increases. Yeah. So no doubt, prices are going up, and we know that, I think, in our business is happening, and it's going to continue to happen. But a lot of people asking questions. Okay, can we sustain this? That gives a little perspective on the economy and what's come out in the last couple of weeks.
Sure. And just so everybody knows, the definition of inflation is a general increase in prices and the fall in the purchasing value of money, right? So does that correlate with the value of the dollar going down, or just the cost of the goods going up, right? All I know is that those chips that I used to buy, those Santoro tortilla chips for $1.99, they're now $2.19.
Yeah.
Right. So it takes $2.19. Things are just costing more. And that's the way that it is. Might mean you don't get to eat lobster 3 times a week, y'all. Or get to drink that $80 bourbon, cut it back.
There's a couple of things that I hear widely right now. And our business is in this shape as well. We have a supply and demand imbalance right now in a lot of areas. There's less supply and there's more demand. Mm-hmm. There's less supply. Think about the restaurant business. They haven't been able to operate. They're trying to hire folks back. They, in some places, aren't operating, most places, in full capacity yet. Sure. So that's coming back. And you got a lot of people that are like, we want to get out of the house. We want to go, have dinner somewhere. We want to buy a home.
People again.
There's demand. And so we're likely going to see that as we come out of this pandemic. Is it long-term? No, but could it, last several months into the next year? Yeah, sure. I think that's probably the case. And it's what most folks are saying about this. So no doubt that's going to affect the price of things going forward. And the question is, when does the Fed step in? All of those things that we know economically speaking. But the good news is, a year ago we were talking about the economy, grinding to kind of a halt, and now we're talking about, all right, we're coming out of that. So there is a silver lining to it, no doubt, in economic growth.
I have my particular opinion of why the unemployment did that, what they did.
Sure.
It was everybody got their stimulus money and they bought Dogecoin and they made a bunch of money and they didn't want to go back to work. But you're right. In these restaurants that aren't operating at full capacity, they're paying maximum amount of money to try to get people to come work for them, but people don't want to go back to work.
Yeah.
It's so it's interesting to jump into taking a look at that report, to deep dive into it, to see what are some of the underlying factors why it missed by 80%.
Oh yeah, the experts missed it big time, and a lot of people scratching their heads, kind of going forward. Relative to their projections on,
Mhm.
unemployment. I think what you'll see next time is they'll probably shoot it low and be over, out of the hesitation to try to forecast it. But
It's
the good
easier.
news is things are opening up. Things are, people are getting back to work, and we want to see more of that for folks.
Yeah, and the good thing is we're talking about this a minute before, and I was in a group the other day that was talking about, positioning everybody for foreclosures and short sales and
Mhm.
stuff like that. And while that may be possible, and especially in an inflation situation, because that passes down, right? It's going to trickle over to the housing market. And what if prices do go down by 15%? That doesn't constitute a crash. I
Yeah,
don't think we're going to see any kind of decrease like that, but
sure.
let's talk about forbearance. Forbearance is on on the decrease, and exits are picking up steam.
Yeah. Yeah. So, I mean, think about it right now. If you go back to a year ago, the narrative really was, you know, this forbearance is getting rolled out, and certainly on the mortgage side of our business, and those are folks that are watching it very closely. Not that we weren't, but mortgage people are basically like, this is going to happen, and everybody's going to get foreclosed on. This is going to be, the end of those folks, and it's turned out very, very different than what we've seen, and there are specific reasons for it. But I'll give you an update on that, and still some maybe some of our clients thinking, are things about to kind of blow up relative to forbearance? So, number of mortgages in active forbearance right at 2.3 million. It's been that way for the last 4 weeks. A slight, ever so slight tick up in the last week, but that number's coming down. If you look all the way back to May that I have here in this graphic, over 4 million in forbearance. And, I think last time we talked, about 400,000 people have come off forbearance in the last couple of months, and it's largely gone unnoticed. I mean, it's a non-issue. The question is, what's happening to those as they come out of forbearance? Try to keep everybody that follows us on these every other Friday calls up to date on that. This is the latest look, and if you've been watching, you remember this pie chart. 47% came out paid in full, and that's as of the end of April. Here you see April 25th. And so, almost half didn't need forbearance. 36.6, almost 37% are in some form of reworkout with their bank. Now, we said before, banks don't want these properties back. Banks don't want foreclosures. They don't want to have this, and they're very motivated to help folks out. 16% are still in trouble. And those are the ones we need to be concerned about. Those are the ones we're able to help. But Johnny, I got to tell you, if somebody right now is in our market or wherever we're at, and they're been affected financially by the coronavirus, they were in forbearance or coming out of it, and they're still in trouble, they could put their house on the market, likely see a premium, sell over list price in a lot of cases, and put some money in their pocket. Very different scenario. I can't see a scenario where these homes would go into foreclosure. Now, we'll talk about that here in just a second, but the story of this graphic, if you've been watching it, is what's been happening over time. So when we started looking at this in January, about 52% were paid in full. Now it's about 47%. As we go through time, less are coming out paid in full, but still a healthy amount coming out paid in full. More are working things out with their bank. That was at about 32.5%, and that's 36, almost 37% now. So what are you seeing? Less come out with paid in full, and more working it out with the bank. And what's staying the same roughly? Are we still in trouble? 15 to 16% there. That line's relatively flat. And so banks are trying to figure it out for people. They're trying to tack it onto the end of the loan, go through a rate and term refinance, go through a workout, whatever the case may be, to help folks stay in their home. And I certainly think that's the environment and the what the CFPB has said. We want to see these institutions, these servicers, these banks help people through this. And I don't see an environment that we live in that's aggressively looking to foreclose on anyone. And so I think that's important to remember in this crisis in people wondering, is there going to be a crisis, and is the housing market going to crash, and what about all the things that are out there? Use this information to communicate that. And here's the last piece of information I'll share with you. As of April 20th, as according to Black Knight, there are now 160,000 high-risk forbearance exits who have left their plans and they're not in loss mitigation and remain delinquent. That said, there are more than 100,000 of those borrowers who are already delinquent heading into the pandemic.
That's a good statistic.
So there's, there were folks that were in the process of foreclosure. Now, we don't wish it upon anyone, but it's a fact in our business heading into the pandemic. They went into forbearance. There are definitely people that go through foreclosure every day, every week, every month across the country. They have options today.
Sure.
I mean, there's a very, very small chance that someone is upside down in their mortgage right now. They are out there, but a very, very slim chance.
I would think that it's an extremely slim chance.
Yeah, and I think there are options for people that want to, or need to sell their home. And I think we have to be vocal about that, and certainly talking to people and saying, hey, if you are in that shape, let's sit down and let's talk, and hopefully we can help you. Put some money in your pocket and help you and your family get to the other side of the crisis that you're in.
Yeah, and that is such a good statistic to see, because that breaks it down to 60,000, right? So pre-pandemic, I mean, it wasn't like the world was rosy, but we have since over the past year, last year, this time to now, we've seen an increase in appreciation. So you entered forbearance then, you should be able to come out of that smelling like a rose now. And even if you had to do a short sale, that should go relatively quickly. But I can't imagine you would need to, because if you bought your house 2 years ago or 3 years ago or 4 years ago, it's not like you bought your house in January when the pandemic hit in March, I guess it was. You're heading in, you're delinquent, right? You would have had to bought the house several years before that. So you have 8, 10, 12, 15% appreciation in some areas that you should be able to get out of that unscathed.
Well, I mean, on average across the country, last year has seen 10% appreciation, and we're seeing the market be very hot. And certainly, this has been a service sector driven recession. I think a lot of those individuals happen to be, the ones that are homeowners on the lower end of most markets. And those homes are, we have a lack of homes on the lower end in every market. So there's certainly a case to be made that if somebody was in, I can't see a scenario where somebody doesn't sell other than they didn't know they could. And certainly drop in the comments here, Johnny and I, look at that. If you see another scenario, or let us know what's happening where you're at. But I think there are options for people today. The likelihood of any type of foreclosure crisis right now in this country is zero. I mean, it's just not there. So I think
I would agree with that. I would agree with that. There's 30 offers on homes. I mean, 100,000 over asking price. I'm seeing all sorts of ridiculous things going on out there. And everybody that I talk to, and I talk to a lot of people, it doesn't matter whether you're in Knoxville and you're in Nashville or Franklin, Tennessee. It doesn't matter whether you're in Charleston, South Carolina, Florida. I did a feasibility study down there 2 years ago for a project I was involved. The population was estimated to grow at 6 million over a decade, but I think they're going to shatter that, right? So even in areas where there's what some would say is a mass exodus, from California, you're still getting multiple offers, multiple offers in Oakland, in San Diego, in Temecula, right? So I don't see the crisis either. The only crisis we have is there's not enough houses.
Yeah, and we've talked about that, Johnny, we've talked about how construction hasn't kept up with population growth, and builders were hit extremely hard coming out of the crisis. But here's the other thing I think that's important about this is most folks that aren't in our business don't realize this is the reality today. They're still concerned people are unemployed, and we should be concerned about those people. I'm not saying that. They're still concerned people can't make their mortgages. They're concerned. They're seeing everywhere home prices are escalating. They're going, this feels very familiar. And I think they're if you read the headlines, you just listen to what's being said and you hear there were 30 offers on the home next door. I would have some questions too if I weren't in our business, if I didn't see this information every day. And so I think it's important that we continue to talk about it.
I do think that we need to talk about it and talk about talk. We're talking about what JP and all the other big boys, and let's just face it, the one with the gold makes the rules in a way, right?
Yeah.
Unless you're GameStop and Robinhood. But anyways, but let's talk about that. What's the buzz on the street with the big boys?
So yeah, I pulled some quotes here for everybody from major financial institutions in this country, and here's why I pulled them from: J.P. Morgan, Merrill Lynch, Goldman Sachs, Morgan Stanley. What are they telling their clients right now about the real estate business? They manage more wealth in the world than anybody else. Giving counsel to the most wealthy individuals, and oftentimes those wealth counselors, those financial planners, aren't exactly telling people to buy real estate. They want them to buy products that that they're endorsing. But let's look at this, and here's how I would coach you to kind of go through this, because several quotes. Let me read them. Then Johnny, we can talk about that. Is if somebody that you're working with is concerned about this market, use this information. Don't say, hey, don't listen to what I'm saying. Let's look at what JP Morgan's saying. Let's look at what Merrill Lynch is saying. And use these to your advantage this way. First one we'll start out with here. JP Morgan. Housing prices have spiked during the last 6 to 9 months, but we don't expect them to fall soon. And we believe they are more likely to keep rising. If you're looking to purchase a new home, conditions now may be better than 12 months hence. They're saying buy it now instead of waiting. That's JP Morgan. Those who remember the housing bubble of 2006 and 2007 may be nervous watching U.S. housing prices soar, but the previous bubble was fueled by speculative buying, which we do not believe is the case today. Big piece there coming out from JP Morgan, their insights report. Merrill Lynch. There are reasons to believe that this is likely to be an unusually long and strong housing expansion. Demand is very strong because the biggest demographic cohort in history is moving through the household formation and peak home buying stages of its life cycle. We're talking about millennials there. They're all buying houses. They all said, we want to do something now. We don't want to rent forever. We want to buy a house. And coronavirus-related preferences changes have also sharply boosted home buying demand. At the same time, supply is unusually tight, and with available homes for sale at record low levels, double-digit price gains are rationing the supply. It's a supply and demand imbalance. Like we started off talking, we have millennials that want to buy homes. Goldman Sachs says this: strong demand for housing looks sustainable. Even before the pandemic, demographic tailwinds and historically low mortgage rates had pushed demand to high levels. Consumers indicate that household buying intentions are now the highest in 20 years. As a result, the model projects double-digit price gains both this year and next. I'm going to come back to this, Johnny, in just a second and talk about household buying intentions. That's really key. Remember that from this quote. One I'll wrap up with here. Unlike 15 years ago from Morgan Stanley, the euphoria in today's home prices come down to the simple logic of supply and demand. And we at Morgan Stanley conclude that this time the sector is on sustainably sturdy foundation. This robust demand and highly challenged supply, along with tight mortgage lending standards, may continue to bode well for home prices. Higher interest rates and post-pandemic moves could likely slow the pace of appreciation, but the upward trajectory remains very much on course. These organizations, certainly coming out of the housing crash, are doing their homework. They're not going to step out and say something and be out of line in it. And they're saying, hey, we see this continuing into the next year. We don't see the supply-demand imbalance changing anytime soon. That's important to remember for people that are sitting there going, do I want to buy right now or wait? I mean, if I wait 12 months, prices are going to fall. I'm going to get a great deal and we're going to do that. Well, that's not what's being said.
No.
I want to talk about, that's a great question. I see your question, Lee. What constitutes a crash? I'll come back to that in just a second. Let's go back to what they said about those that are thinking about buying. The consumer surveys indicate household buying intentions. Johnny, something very interesting is happening right now. If you remember back in 2008, we came out of that crash and people sort of said, I don't think buying a home is the American dream anymore.
Mm-hmm.
They said, I'm going to go out and rent. And I just lost all this money in my house. My parents were foreclosed on, or I had to short sell my house, whatever the case may be. We all knew people, if not us, were affected by that. Mm-hmm. And people said, you know what? I just don't know. Maybe renting's the better option. Well, we're coming out of a crisis right now of a pandemic, not housing related. We have to keep that in mind. Very different from 2008, but we're seeing the exact opposite effect. We're seeing people say, I want to buy, and people paying overpriced because it's important to them and their family that they have enough space, whatever they're looking for that they didn't have over the last year. Mm-hmm. And, you know, certainly going into this year, I'm hoping we're coming out of this thing, you know, nothing happens like that, but people are sort of thinking, if this were to happen again, home took on a new meaning in the last year, and you're seeing demand, and you're seeing people say, you know what, we want to buy a house. We want a backyard. We want an extra bedroom. We want these things, you know, for our family, for us individually, whatever the case may be. And it's something that's happening across this country, all over the place. So I would encourage you to use these slides, and if you want to send me a message, I'm happy to send them to you. You can send it to David at Keeping Current Matters. I'll give them, Johnny, to you if we can get them up for everybody. Sure. at LabCoat, so that you can use those and say, let's look at what major financial institutions are saying about our business right now.
You know, and it's important. You were just explaining that people want these things, and people, the millennials, they want these things, and families and blended families are a big component out there. I mean,
multi-generational families. Yeah.
Mm-hmm. Right. I would say that. Well, not just the generational families, but the blended family that are getting remarried and 2 kids. She's got 2 kids and he's got 3 kids, and now they need a bigger place and all that other stuff. Yeah. But on the Maslow's hierarchy, it's basically safety and needs, right? So they're looking for that security.
And that changed. That changed in the last year.
Yeah, which I think is great. And so we got a couple great questions here. And Sue asks, do you think once schools are back in full swing, will people go back to work? God, I hope so. I don't know how. I mean, I'm fortunate. My children are 19 and 20 and self-sufficient. I don't have to worry about those. God bless every parent out there that's been homeschooling with your children every day. I feel your sympathy. I can't relate because I've never had the experience, but I do think once, you know, if you have children, not everybody does, but once that opens up, that segment of people will get back to normal. Everybody, I think, is yearning to get back to normal, right? I really do.
I've got 3 at home. Okay. That are teenagers that are in middle school, high school. And yes, I believe school is going to be back in session this fall. I believe we're going to go through a transition period where life gets back to normal. You know, summer camps, let's take it for example, you know, probably aren't full open this summer. There's just going to be some catching back up that we have to do, but we're going to hit this point and we're going to be back. So I fully believe that. And I think we're all ready for that to come, you know, and safely and all that stuff. But yes, I believe that.
Yeah. And then we got a great question from Lee. Y'all, we're not going to copy the messages from here. Email David at keepingcurrentmatters.com, right? That's the email.
Yep, that's me. Yep, David at Keeping Current Matters. I'll send them to you, Johnny, and we can get them out to
and then everybody. We'll post them up in the file section of LabCoats. Lee asks a great question. What constitutes a crash?
So that's a great question, Lee. So if we have to think about our business, it's always prices. So when prices drop, that would ultimately be what we would say would be a crash, right? That's what happened in 2008. Prices dropped in this country 20%. Never happened before, hasn't happened since. So pricing is always going to be dictated by, in any category, not just housing, by supply and demand. Okay, so what you have to look at in your local market is, do I see a lot of supply coming online? Are builders building? Are, you know, is there an area where, you know, folks are saying we're going to move, we're going to get out? So where do you see supply going? The other is demand. Now, demand is going to be largely regulated in our business by, you know, whether people feel confident they have a job, and interest rates. You know, can I buy something affordably? So Where do you see that heading? Are employers in your town hiring, laying off? What is their status? I can tell you on mortgage rates, there's two things being said. One is rates are going to go up. The only question is by how much and how quickly. So rates are going to go up. And in the meantime, most forecasters don't say that's going to squelch demand. I mean, we're sitting right at 3% for the average 30-year fixed right now. We got a lot of upward room to go before we go, okay, rates are getting high. I mean, we bought our first home. I think, Johnny, we were at 7.25 when we bought our first home, and we were like, it's not terrible, but we're nowhere near that. We a lot of people have been talking about we were having conversations a month or two ago about we're at 3.25 and interest rates are rising. I mean, we're in a great interest rate environment. So Lee, it's a great question. It would have to do with supply and demand. Anytime, we are certainly in a seller's market right now. Nobody, defies or, would argue with that. And that's because there's less of the supply on the market and more people want it. We bring supply up and less people want it, we're going to be in a buyer's market. So that hopefully that answers that question.
I remember when I refinanced, we bought our house. I think we're at like 9.75. We got probably jacked into some crazy loan or whatever. It was FHA, but I think they added some points to it or something.
Yeah, right.
Man, then I refinanced like 6.875, and I thought I was king for a day.
Yeah.
It's amazing.
It's all about perspective. It's all about perspective.
So to get these rates at 3% is ridiculous. People don't realize I think they do realize how good they are. Hopefully they're grateful about it.
Yeah. Well, that is like been an environment in this country for the last 20 years where we've been in the 4s and 5s, and so it's low, but we haven't been in a 6 or 7 or 8
for a long time.
For a while. Yeah.
So that's about it for our time. We're a little bit over, but that's okay because I think we started 2 minutes late. So that's a lot of excellent information this time around. Listen to the big boys. I mean, they are what drives, and they create and control the economy, right? The big banks and big corporations and stuff. And what they're saying is there's no sign of a crash coming. And the news shows there's no sign. Listen to everybody but the economists because they got that wrong. And the fact, even still, 6.1 isn't a ridiculous unemployment rate, right? And some things that I would love to dig into that they don't take into consideration. How many people decided to start their own company while they were on unemployment and decided to do something online, or, hey, maybe they trying their hand at landscaping? Because I can tell you that when we talk about the economy and the recession and unemployment and stuff, and inflation, I just don't see it in the housing market. But I also believe that the housing market is usually there's a lag time between the housing market and the economic factors that are out there. Yeah. Maybe a year, maybe 2 years, but we're just not seeing it. We're just not feeling it. And you start to take a look at some other economic factors, like state factors, like take North Carolina, where you got Amazon moving in, and you have Apple moving in, and you have all these other big companies are moving into the Raleigh Triangle area, right? They're not going to see a price drop anytime soon.
Right. And remember, too, the economy is driven by innovation. Mm-hmm. When there are situations where there isn't enough product for the demand, people go, I'll start a business. I'll fix this, mm-hmm. And builders are doing that right now. Builders are saying we need more houses, and they're building. And I think you're going to see it in other areas of the economy. People saying, you know what, this is an undersupplied area of the market. We're going to start a business. We're going to meet that demand. Right. And so I'm very, very bullish on that.
I worked with a builder several years ago, and what they ended up doing was going to another part of the state where land wasn't 100,000 for a buildable lot. It was 12.
Yeah, right.
And what they did was they took their houses and they scaled them down, and they sold 50 of them in a year like that.
And there's a lot of markets where there's not a lot of land in the metro area, and they're going further out. And by the way, people can, in a lot of cases, maybe work remote a few days or whatever it is, and they're okay with that. If I don't have to drive in every day, then, I think we're going to see some trends like that continue to evolve.
Yeah, I got to tell you a funny story about that driving thing. So my son called me this morning. He had just got his car fixed yesterday. The starter was gone on it. It died going down the highway, and it seems like it might have been the alternator. And you know how one thing goes, another thing does. So I pick him up. He was about 25 minutes south of me. Then I brought him down just north of Boston into a town called Medford. They're working at Tufts University. He's a union carpenter. He's a journeyman. He's 19, which is unheard of, and he's making ridiculous money with ridiculous union benefits and everything. And he said, "Oh, this drive sucks every single day." I said, "Do you understand you're making more money than most adults that I know? And you've got to drive 40 minutes to work. You realize people drive into Boston and sit in that traffic and everything else every single day for less money?"
Right.
He's like, "I know, I got to get my priorities right." But people do, they will drive an hour, or hour and 15 minutes, a couple times a week. And I worked with somebody several years ago, and what they looked for was emerging markets. And they would go into these emerging markets and they would buy huge complexes, 100, 200 apartment complexes. They would go through, clean the places up completely, and they would flip them. They're big money flips, if you would. They'd buy them for 3 million, put 2 million into them, and sell them for 10 million. And what we need to be looking at is, and what I would suggest to everybody listening is, you want some hints on how to grow your business. Take the real estate agent cap and tilt it to the side just a little bit and listen. Where are neighborhoods coming up in your area? I mean, gentrification is real. Where can you get investment properties? Where can you get knockdowns or anything else like that? Where are maybe 45 minutes, an hour out from where you are? Now, I know if you're in like certain parts of the DC metro area, 45 minutes out, you're still in the thick of it, right? But there's areas where can you go an hour away to potentially find those pieces of land to be able to build that inventory. It's going to be expensive because lumber is so expensive, but think different, think bigger, expand just a little bit more, and you'll find those opportunities. The key is political, will easier for permits, less costly. That's a state and local county issue. We won't even touch that one. About the increased housing is a political will to make it easier for permits, less costly, and not always honoring. I don't even know what NIMBY wants. I don't know. But anyways, a lot of that stuff is when it comes to permits is local. We don't know anything about local. We just look at the national factors. Anyways, let's get your 14 days. Not in my backyard. Oh, I got you. Get your 14 days free trial of Keeping Current Matters. You get a lot of information. It makes you look really smart. You got a feed that you can have it go right onto your Facebook in case you don't want to post. They'll post it pretty much automatically for you, correct?
That's right. Yeah. You go to trykcm.com.
Trykcm.com. Go get your 14-day free trial. Everybody, thanks for being here. David, thank you as always. The information that you present is great. On behalf of LabCoat Agents, be safe.
Thank you. Have a great Friday, everybody.
Bye, everybody.
Bye.